Alright, so there's a stock in my portfolio that I have been pretty close to adding recently. It's one of my bigger positions, but I haven't been able to add to it in a while due to valuation. The company that I'm talking about is, of course, Apple, stock ticker AAPL. Apple is one of the strongest businesses in the entire world. It's one of my bigger sized holdings in my dividend growth portfolio. Its dividend growth is actually not really that good, but its share buybacks are absolutely insane, and we're going to be talking about it all today. And before the video starts, I typically beg for your money, which is with buying the merch, smashing the like button, or subscribing. But today we're going to do something a little different. Tell me in the comment section right now, what are you using that's an Apple product to watch this video right now? Is it a phone, iPad, Mac, AirPods? Let me know. And this is just an example to show how strong of a business that Apple really is. Alright, there you guys, and of course, roll the intro.
Hello, I like money.
To start off, let's just discuss my thesis on Apple as a business overall. Apple, in my opinion, has probably the widest moat in the entire world. As somebody who goes to a high school and sees people using Apple products quite literally every day and who are addicted to it, if people expose their actual screen time on Apple products, it's absolutely insane. People are quite literally mentally addicted to these products, and people, including myself, need them to go on with their everyday life at this point. Whether it be not charging your phone, forgetting your AirPods, or whatever. People are addicted to these products and they use them every day. With this, Apple has a natural ecosystem. I have an iPhone, I have AirPods, I have an Apple Watch. I am tied into the Apple ecosystem, and I love all of those products. First of all, my phone, I need it every day no matter what. For communication, just not getting bored, or whatever reason, I need my phone. I had been somebody who never worn headphones in public or AirPods or anything like that, and I could say after using them for about a month, I was instantly hooked, and I don't see today how I can go on with my life in school without my AirPods, whether it be watch YouTube, TikTok, whatever. And my Apple Watch is an amazing tool to track my heart health. It's a really good way for me not only to track my sleep as well, but it's a really thing that I rely on now for when I'm doing a new diet program, trying to track sleep, or anything. I am fully tied into the Apple ecosystem. I have an iPad, an iPhone, AirPods, an Apple Watch. So somebody who consumes the product itself, I think Apple is one of the best businesses from a consumer perspective that I would want to invest in. Apple is currently trading at $182 per share. Now, is that overvalued? Trust me, we'll get into it. But as somebody who primarily invests for dividend income, Apple does not provide that. They currently have a dividend yield of 0.53% and have raised their dividend just where inflation has been for the last couple of years. It's really not been good dividend growth, to be completely honest, but its business is so strong and they reward me as a shareholder through more ways than just the dividend, where I want to hold this no matter what happens with the dividend. We can see how efficiently Apple's grown their earnings per share as well to the right. Apple is one of those positions that I'm up a lot on too, because I was buying in the $120s, $130 range. Berkshire Hathaway and Warren Buffett were buying Apple stock at $150 to $160 in that price range, and I think today, as the way that Apple has grown their earnings, Apple's really close to being a company that I'm looking to buy in my portfolio, and it could be at fair value long term. To start off here, to give us a broad view of the earnings, we'll just look at the PE ratio, we'll look at the price to free cash flow, trust me. But to start off, currently the quarterly PE for Apple is sitting at 22.01, which is the forward PE ratio. Now in July, it was trading at 38.29. For context, it's down 5% since that time frame. Apple's grown their earnings so efficiently though. Warren Buffett and Berkshire are buying this company where it's trading at a price to earnings of around 28. Now I'd assume the reason they're probably not buying right now is probably because they think a lot of stuff is overvalued, especially because of Nvidia, and it seems whenever the S&P 500 is down, Apple's one of the leaders. But we can see even though recently it appears that Apple has continued to grow their earnings and the market has not rewarded them for that, having their PE ratio be lower according to their earnings. Pulling up Apple's price to free cash flow, which is another solid way to value a company. Currently, Apple's price to free cash flow is sitting at 27.07, which is around the median where they've been trading at over the last 10 years. So this could be an indicator that Apple is at a fair price or maybe a little overpriced. But you know what I say when it comes to a great business, I'm willing to pay a bit of a premium for a long-term time horizon to own an amazing business that's going to give me a lot of money at the end of the day. I mentioned that Apple's dividend growth has been underwhelming recently. We could see recently that their last hikes have been 4.35% and 4.55%. The main reason for this that I could really find, they're allocating a lot of money to share buybacks and repurchases. A historical amount towards that. For those of you who value dividend safety though, that should not be an issue with Apple. And this is another reason why the dividend growth has been a little disappointing for a lot of dividend-focused investors. I'm not really disappointed about it, to be honest. But recently, their dividend payout ratio has been like below 20% for the last 5 years. It's currently sitting at 15.09% according to their free cash flow, and the annual payout ratio based off of net income / EPS. For accounting reasons, I just pay less attention to this, and I like to actually go off of the free cash flow because that's my important metric when it comes to a business. But payout ratio is not an issue for Apple right now whatsoever. But if you guys like share buybacks, and share buybacks, essentially, to really recap it quickly, share buybacks give you more of an ownership stake in the company. It's a great way for companies to reward the shareholder. Recently, Apple's buybacks have been absolutely unprecedented. For the last 3 years, they bought back 3% of shares at least. Last year, they bought back 3.14%. The year before that, 3.2%. And the year before that, 3.78%. And the 2 years before that, this is absolutely incredible, 5.74% and 7.2%. That's absolutely insane stuff from Apple, and it gives the shareholders so much more value. It's absolutely wild. Now, here's a clip of Warren Buffett talking about Apple and why he thinks it's one of the best businesses in the entire world, and I completely stand with this.
It's owned it for a considerable period of time. The rest are my portfolio, but I bought just a little bit. I like to buy them cheaper. I mean, it's very difficult. I started buying when the stock was maybe 100. I was buying it kind of as fast as I could, and then I ended up buying some as high, a whole lot higher. I won't name the exact price, but a whole lot higher. I'd rather have it go down. For one thing, if it goes down, Apple's going to buy a lot of stock back. They're already buying stock back. And if it goes down 10%, it means they get to buy 10% more shares. And my interest will go up 10% more for spending that money in buying shares. So I am benefited by going down. If I were to talk my book, I would talk it down.
I spoke with an analyst today, Gene Munster, and he pointed out that the interesting thing about Apple is that for a long time it was a very volatile stock. It kind of traded in this boom and bust cycle. Every time they had a new phone that came out, it would push the stock higher. If they didn't have a new release, it would drop. He said that it's still 65% of the business, but a lot of people are maybe looking at it a little differently. And he wonders how you look at it. Is this a boom and bust cycle, or is there something different?
Not in the least. I don't, I like to see the new release do well, or, that. But I do not focus on the sales in the next quarter or the next year. I focus on they won't tell you exactly how many, but hundreds and hundreds and hundreds of millions of people who practically live their lives by it. And if you look at that little piece of whatever it is, that is some of the most valuable real estate in the world. I mean, that is Fifth Avenue will never come close to that. I mean, it is. You've got hundreds and hundreds of millions of people with loads of buying power and able to do business or learn information or whatever it may be, and it's part of their habit of living. I mean, they spend hours a day, and it does all kinds of things for them. So that real estate is worth a fortune, and it's nice to have it added to as they sell new phones. And of course, a lot of them are replacement phones, but they're adding to hundreds and hundreds of millions of consumers that are never going to get to Fifth Avenue, or they're never. And you are an indispensable part of their lives. I mean, it's an extraordinary product.
Yeah, so me personally, if Apple continues to fall into the 170s, I will most likely be buying there. If it goes below 170, 160, I will definitely be buying. Apple overall is one of the best businesses in the entire world, and one that I ideally want to hold for 50 plus years in my portfolio. Their share buybacks are absolutely insane, and hopefully later on their dividend growth can pick up as well. Let me know in the comment section what you guys think about Apple stock. I greatly appreciate you making the video. Smash the like button, subscribe, and do Dividend Stocks Not Drugs. Have a good one.